Good morning. It's the midweek edition of Business Morning here on Channels Television. I'm Ini John McWhite. It's the third time we're doing this week, and I hope it's been very relevant and very important to you so far. So let's do another 55 minutes today, and we'll make the most of it. We'll start off with oil prices and tell you that oil notched higher on Wednesday, extending gains for a second session as planned supply cuts again are still moving the markets by the world's biggest oil exporters, and hopes for higher demand in the developing world offset wider economic concerns globally. Brent futures rose 6 cents to $79.46 a barrel, while U.S. West Texas Intermediate crude futures rose 6 cents to $74.88 a barrel. Last week, top producer Saudi Arabia pledged to extend the production cuts of 1 million barrels per day in August. Russia also followed suit, planning to cut 500,000 barrels a day. On Tuesday, the U.S. EIA projected demand will outpace supply by 100,000 barrels a day this year, 2023, and by 200,000 barrels a day in 2024. The International Energy Agency said oil market should stay tight in the second half of this year, citing strong demand from China and developing countries, combined with recently announced supply cuts by those two countries, Saudi Arabia and Russia. Markets are pricing in a 92% chance of a 25 basis point hike later this year. The CME Fed Watch tool shows that higher rates can slow economic growth and reduce oil demand. Still in the global space now, but grain. Chicago soybeans rose for a third consecutive session on Wednesday, climbing to a one-week high as a widely watched U.S. government report, which is due later on today, is expected to reduce its production and supply estimate. Wheat edged higher, holding on to last session's strong gains, with attention turning to Black Sea supply risks after a drone strike on Ukraine's Odessa port. The most active soybean contract on the Chicago Board of Trade rose 1.1% to $13.75 for half a bushel, and after climbing to its highest since July the 5th at $13.76 for a bushel. Corn added 0.8% to $5.05 for a quarter of a bushel, and wheat gained 0.2% to $6.61 for 3/4 of a bushel. Analysts expect the USDA in a monthly supply demand report, which is due later on today, to cut its forecast for the U.S. soybean harvest after the agency slashed its plantings estimate in a June 30 acreage report. Soybean ending stocks for the 2023-2024 marketing year expected to tighten as well. We come back to the continent now, looking at capital market integration in West Africa. It's a project that has entered its second phase, and just yesterday in Lagos, we saw regulators, stockbrokers, and other stakeholders in the capital market space come together to discuss the rules that will guide this integrated market in West Africa. They're also giving timeline as to the implementation of it. So very soon, you can buy stocks from anywhere in West Africa without leaving your location.
The settlement issue is another big issue, which is one of the major issues we had in the phase one. Because of the settlement issue, you have to look for the third currency changing to the amount equivalent to know the reference currency, the dollar. So now there is another initiative in this space, which is trying to leverage on the Pan-African payment system. They call it PAPS. So this PAPS is like settlements in domestic currency. If a broker in Ghana has traded on the securities of Nigeria, he can buy it in Ghanaian cedis and then settle in Nigerian naira.
We intend to help create some set of rules by which everybody can apply and then cross over to do trades. And then finally, where we want to get to is where we have the WASM, that is the West Africa Securities Market, where we have a fully integrated virtual market and people can trade across board with no restrictions. Here we have licensed dealing members who qualify to receive a common passport, which will be mutually recognized by securities exchanges and commissions across the West Africa region to be able to trade. Now, these qualified West African brokers will therefore be able to participate directly in the markets they wish to deal or trade in across the region. And then also in this regard, the QAPs shall comply with all market rules that are applicable in the host market.
Well, that's it. We had this conversation last week with one of those organizers here in the studio, telling us how far they have gone and some of the things they have put in place. So we'll follow that. They're having more meetings, I think, this month and next month to put finishing touches to the phase 2, expectantly. That the implementation will also begin really soon. But now let's move on the program now and talk about a whole lot of things. It's everybody's talking about the first half and outlook for the second half. Let's look at some of the policy review we have seen since President Bola Tinubu came on board, and perhaps discuss how far or expectations and the impact so far. We're not up on that list, of course, is the subsidy removal. You also have the unification of the exchange rate and what it's doing all over. Well, joining us to discuss this is my namesake. He's Inyobong Hussein, joins us virtually from Abuja. Good morning, Inyobong. How?
You are not audible. I cannot hear anything coming from the studio.
Can you hear me now, Inyobong? Can you hear me?
I can't hear you. You're on mute.
Oh, wow. Obviously can't be on mute now. Can you hear me now?
Yeah, I can hear you now. Oh. I've not heard you for like the past minute.
Okay, all right. So you didn't hear when I said that it's actually nice to be calling my own name, you know, on air. Good to speak with you, namesake.
Yeah, good morning. How are you doing?
I'm fine. So we want to review some of those policies, looking at the first half of the year. We've had a lot of good news, movement in the market, equities. We saw capital importation also rise quarter on quarter. We've seen a lot of review of the growth for this year by the World Bank from 2.8 to 3.3, because everybody seems to think that the president is on the right track. And of course, this raises expectations. But you know, Nigerians are still feeling the pinch of a whole lot of things, subsidy removal and all of that. But let's get your perspective so far. Would you join every other person who believes we're on the right track, we're having positive movement in the economy so far in the year?
Yeah, thanks for having me. Granted, yes, the government has made, you know, very good policy statements in the first few weeks of this administration. I mean, depending on which side you are on, the citizen side of things, we know with the removal of fuel subsidy, with the proposed increase in the in electricity tariff, the unification of the exchange rate, there's been some sort of economic challenges that the average Nigerian has been subjected to. I mean, with inflation, with increase in the price of food and all of that. But on the business side, there's been a lot of progress. I mean, you just alluded to some progress we've made with capital importation. And I mean, that can be attributed largely to some of the statements in policy movements that government has made in terms of the convergence of the different windows for the exchange rate. I mean, one of the major challenges coming from the previous administration had been, you know, it had been very difficult for foreign investors to move out capital, with some capital control in place and difficulty in accessing forex. But with the liberalization of the exchange rate, it's somewhat easier to access forex and move out funds, and that has built investor confidence, as you would see with positive gains in the capital market. But this needs to be balanced with some fiscal policies that would ease the burden on citizens. And if you want to look at the impact of this policy across the four major sectors, like you would see with the real sector, consumption, obviously with a reduction in disposable income, we expect that consumption in the short term would sort of reduce. People are rationalizing their expenditure. People are deciding, what the essentials are for them to spend on and what they can forgo in the interim. I mean, on the external sector, with the opening of the borders, we expect that in terms of imports, we expect more imports, and that will have an implication for trade balance. And for remittances, if you are looking at net transfers, we expect that because of the reduction in disposable income, the pressure now on diaspora remittances would increase. And with a lot of conversations I've listened to lately, diaspora remittances after the implementation of the subsidy removal, has had to increase because the cost of living has increased, and this has had an implication for the cost of living crisis for Nigeria. And so we expect that also in the short term, remittances, net transfers would also increase.
So I don't think, for instance, when you look at the capital importation, it's for the first quarter. That was even before the swearing in of President Tinubu. So it seems investors were already on standby to say, oh, things are going to turn around in Nigeria. And that's why we saw that move even before we settled election issues and all of that. Now, on the other hand, we cannot say that we have started seeing the fruit of these policies yet. I guess looking at the time lag that's required and all of that, because it's still, FX is still an issue in the country. Supply has not increased, and the unification of the rate has not really been achieved yet, because you still have, the price or the rate of the naira, going this way and that. How long do we have to wait to start feeling the relief or the fruit of these policies? We're still even waiting for the palliative, apart from states like Rivers State, where the governor has provided some buses. We haven't heard stuff from the federal government yet.
For the palliatives, I'd like to take it from your last point. For the palliatives, I'm necessarily not holding my breath, largely because, if the government had any plans to, to provide any cushioning effect, resulting from the removal of subsidy, that would have been in place before it was announced. And as you know, there have been several claims around the revenue challenges we have, the competing needs to provide services, with service delivery and all of that. So I'm not holding my breath, but it's important that government finds a way, to cushion the effects. Especially for the most vulnerable members of society, and this should not be left to the federal government. The state governments, in their own different ways, should find ways to reach the hardest hit by these policies in their respective states, and it's within their domain. And coming back to the time lag, yes, there's usually a lag between when policy is implemented and when you feel the effect. But in terms of investor confidence, like I had said, we've seen some improvement in that regard, especially with certain things around certain appointments. I was really happy with the last appointment made with the Presidential Committee on Fiscal Policy and Tax. that's one that is welcome if you know he's able to live up to the expectation. We know his track record as it regards fiscal policy and tax over time, and we're hoping that he'll be able to bring that to bear in terms of advising government on the right policies to take to be able to improve the ease of doing business, and improve the standard of living generally for Nigerians.
What would you say are the low-hanging fruits at this time?
For me, for perception, for virtue signaling, it's the cost of governance. People need to begin to see that citizens alone should not bear, the brunt of, this hard times or this sort of policies, as the case may be. So government should begin to appear as one who is willing to also, take haircuts, tighten his belts, reduce waste, reduce inefficiency as regards its expenditure, rationalize tax expenditures, a lot of those waivers that he would often give to businesses that Nigerians are not getting value for money. These are areas where I believe a lot of movement can happen so that we can create some savings that we can use to implement programs that would directly affect the lives of Nigerians. So, I mean, government, and I mean not only the executive, with this legislature as well, citizens need to begin to see that there's some lifestyle change. We need to see that the government is making attempts to implement, the Orosoye report. So we are keenly looking at what will come out with with regards to the cabinet list, to see if, there had been, news had come out that they intend to increase the number of ministers to 42. I hope that is not the case. And we've had these conversations that, some chief executives of some agencies or corporations of government should be recognized as ministers, so that we can reduce, begin to, merge some of these agencies that have duplicating roles, and begin to look at reducing the cost of governance. Also, with regards to the appointments of SAs and PAs, both at the federal level and at the subnational level, people need to begin to see that government is lean. In terms of perception, so that we see that everybody is trying to adjust to the times. We don't want to see government acquiring very expensive bulletproof SUVs, brand new at that, that you have to fuel with the new cost of fuel, when the average person on the street, cannot afford 3 square meals.
All right, so I guess you'll be one of those that will be happy with the former governor of Ogun State, now Senator Gbenga Daniel, who said that, he would forego, I don't know if it's to delay it or forego totally, some of his pension and allowances as ex-governor, because, that has also been a line of conversation where you have ex-governors in the Senate taking pension as former governors and still getting paid as senators and all of that.
Definitely, and I think a lot of the states that have those pension laws need to repeal all of those laws. The provisions are outrageous. You have states that, with a high poverty rates, and you have pension laws that give, provisions to governors, ex-governors for houses in Abuja, houses in Lagos, with cars that have to be changed every 3 years. For even some ex-governors that spend only 1 term in office, that's not our reality at the moment. So we also expect to see that in a lot of these states where they have these outrageous pension laws, that there are moves to repeal these laws, because we expect that, in the time that these political office holders have held office, they would have been able to amass enough goodwill and wealth, in quotes, to be able to take care of themselves for the rest of their lives. So we don't have that luxury of them also continuing to put burden on the purse. There are persons who moved moved on from being state governors to the National Assembly, and we suspect that they are still drawing allowances from the states and the National Assembly. For the governor to come out outrightly to say that he doesn't, want to be part of that. It means there's a machinery in place that allows him to still access, some of these benefits from the state. And so the states need to really look at this. I mean, this would also, add to the conversation around the low-hanging fruits for states, because the states really need the funds to carry out or properly implement their budgets, especially on critical areas that affect the people. And so we need to begin to look at areas where we can cut waste to redirect these funds or reallocate these funds to addressing inequality, reducing poverty, and creating wealth.
All right, thank you so much, Nyo Bongusen, Head Research and Policy Advisory with Budget. Thank you for sharing your views with us this morning.
Thanks for having me, and have a lovely day.
And you too. All right, let's take a break now. When we come back, we'll go to all the parts of the program right here on Business Morning on Channels Television. Rearrangement on Business Morning this morning as we head straight to the market now with Anite Edet. Anite, how was the market yesterday?
Good morning, Yini.
Good morning.
Another groundbreaking, another record close for the market. It hit the 65,000 points.
That's for the equities.
That's for the equities market, exactly. But I will be telling you more about that. But first, we're going straight to the fixed income market, where we'll be having a primary market auction to be conducted by the Central Bank of Nigeria. So now for Tuesday's trading session, we saw bullish sentiments for the Treasury's market, the Treasury bills, the NTB market. We saw the investors making some. They had much interest for many segments of the market. We had, first of all, the average yield. It contracted by 2 basis points to about 6.3%. Across the curve, we saw average yield close flat at the short end, the mid segment, but contracted at the long end of the segment by 3 basis points, following interest on the 352 days to maturity bill. But take a look at the numbers on your board there. The highest number of deals was carried out on the 27th of June 2024 paper, which had about 7 deals there with a value of 13.5 billion naira, and that was the major contributor to 75.9 billion naira worth of the Treasury bills carried out there. Moving over on the other side of the market, the bond segment of the market, it's also a bullish close for the market. The bullish sentiment comes as average yield contracted by 23 basis points to 12.8%. And then, of course, we also saw for the Omo market also impressive performance there. But we'll be talking about the fixed income, we'll be talking about the primary market auction to be carried out today, and of course, some tidbits from the Forex market. Let's talk to Senator Audu, who is a fixed income dealer at Access Bank, to tell us more about this market. Thank you for joining us, Senator.
Thank you. Thanks for having me.
Okay, yeah, Senator, I have 2 questions for you. First is the primary market auction. We'll be having an outlook on the yields for the NTB bills. We expect that there will be some rollover by the central bank, and at the same time, we saw the naira hitting about 800 naira to the dollar at the parallel market, and then also contracting. This comes as a bookie FX. That's a popular market has returned to resume trading. So you will be telling us more about that. But first, let's start with the primary market auction. How's the market turning out at the moment?
So as Riley said, there's an NTB auction to be held by the Debt Management Office. That's the DMO. A total of over 140 billion is to be offered across the standard maturities, the 91, 182, and 364-day maturities. Last auction, we saw stop rates at across 3 maturities close at 2.87, 4.37, and 6.23%. All these rates represented a decline. The previous auction for the 364-day, for example, we saw the rate up by about 201 basis points from 8.24 to 6.23 pence. We do expect a similar decline at this auction, but we don't expect the decline to be as pronounced. Our expectation regarding the decline is largely informed by the fact that the secondary market is trading at lower levels than they closed at the auction. So we do expect market participants to take that sentiment to the auction. On the bond side, there's an auction on Monday, a bond auction on Monday. We've seen a decline across the 4 bonds issued at the auction. The 4 bonds issued at the auction, those are the on-the-run bonds at 2029s, 2033s, the 38s and 53s. We've seen the 29s trade at 12.5 and the 53s trade at 14.8. But for today, market participants, the bulk of that interest coming on the Eurobond side. There's a Eurobond maturing today for the 2023s, about $500 million is expected to mature into the system today. So we're seeing market participants reinvest those proceeds in other Eurobonds.
Okay, Senator, so we'll leave it there. At least for Friday, we'll be talking more about the fixed income market as well as the Forex market. Now, Senator Aldo, fixed income dealer at Access Bank, giving us details about the fixed income markets trading at the moment. So from there, we move over to the equities market. Another impressive gain, more than 300 billion gain, from the more than 800 billion which it opened the market, and from the 64,000 we've crossed over to the 65,000 level of the market. We see the market taking much interest in the shares of Boa Cement as well as Dangote Cement. So those are the major movers for that market if we have that on the board. Then we also saw mixed performance fall across the sectoral performance of the market. We saw the industrial goods counter driving the market, while we also saw some declines in some parts of the other parts of the market. We saw the year-to-date performance is at 28.1%, while the month-to-date performance is at 7.7% for that market. At the same time, 38 gainers against 34 losers for the market, which shows you that if investors' preference for stocks are really on the upside. But as of yesterday, we saw kind of a mixed picture down to the volume of transactions. They were in the red, but as you can see on your board, it's kind of a mixed picture there.
Yeah, it's just a little bit of profit taking, I guess, and it's expected. Thank you so much. Yeah, thanks, Anita.
Pleasure.
All right, it's AFEX time now. Let's take a breather. We'll be back with AFEX. All right, it's AFEX time now. We can tell that in the last trading week, which ended July the 10th, we saw mixed performances across key indicators. Turnover rose by 3%, closing the week at 5.31 billion naira from 1.77 billion naira in the last trading week. The number of volume traded rose by more than 3%, while the number of deals traded dropped by 2.75%, closing the week at 106 from 109 in the previous trading week. The AFEX Commodity Index rose by 0.56%, while AFEX Export Index dropped marginally 0.01%, closing at 228.69, and that's down from 228.71 in the previous trading week. The volume of contracts traded, we witnessed an increase volume across maize, sorghum, soybean, and paddy rice. Looking at the prices now for the week in review, price across export commodities, sesame, ginger, and wheat maintained at 1,247 naira 57 kobo, 989 naira 83 kobo, and 380 naira respectively. Looking at other commodities now, they witnessed mixed performances, with sorghum up by 6.17% to close at 300 naira for a kilogram. And we look at paddy rice, it was also up by 3.73% to close at 338 naira 77 kobo. And then we look at cashew nuts, it was up also 0.1% to close at 613 naira 49 kobo. Maize, we'll see there, was up 0.50% to close at 281 naira 71 kobo. Cashew nuts, we've already told you, 0.10% up to close at 613 kobo, and all of this is for a kilogram. Now, on the downside, cocoa lost 0.03% to close at 1,181 naira. Sesame was unchanged at 1,247 naira 57 kobo, and sesame unchanged, and ginger also unchanged there, still at 989 naira 83 kobo for a kilogram. Wheat also unchanged for the week in view. So if you need more information, you can always go to AFEX websites. They do have more information on prices and how to participate and be a part of this. Well, one of the things that AFEX has been doing is the code cash crop, and it's on the 4th level now, code cash crop 4.0. A recap of that program. They had a boot camp resource, and we have joining us to tell us about some of the things that they did and they're planning to do. Awolika joins us. Awolika is the public relations analyst, AFEX, and joins us virtually from Lagos. Awolika refused to come to our studio and decided to. Don't worry, the traffic has eased, so so it's not so scary. But welcome to the program, Awolika.
Thank you very much for having me. It's great to be here this morning.
Yeah, good to have you. Good to have you coming from the background, always talking from the background. Now we have you at the 4th. So your code cash crop, this is the 4th edition, and recently had a boots camp across Nigeria, Kenya, and you have a lot of events. Just help us to paint the picture of what you're enjoying, what you're doing with this code cash crop.
Oh, okay. Thank you very much for that question. Thank you for having me once again. So essentially, a huge part of Code Cash Crop, which is about facilitating important conversations within the agriculture industry alongside experts in technology and finance, is the Ag Hackathon. And then recently, over the 7th and 8th of July, we held a boot camp across 3 cities in Kaduna, Ibadan, and Nairobi. And the entire point of the boot camp was to create a platform for talents, young talents, to learn the essentials of building successful ag-tech models that will eventually transform the agricultural landscape in Africa. Right. So beyond the conversations that we're having at Code Cash Crop, right, it was also very important for us to create sort of like an incubation space, right, for these talents to learn from other professionals, other industry experts on how to build strong, scalable models to meet the needs. To meet the needs of Africa's market, which forms the entire point and theme of Code Cash Crop this year. So I will say that we had a very successful simultaneous boot camp across Lagos, across Ibadan, Kaduna, and Nairobi, right? And then the participants at this point went through very interactive sessions that were aimed at, challenging their thinking on what it means to build the type of successful models that we want to see here at Code Cash Crop.
So what would you say are some of the high points, the low points, challenges, successes for both you as the organizer and the participants of the boot camp?
Okay, thank you very much for that question. I will start from the successes of the high points, rather, of the event, and then pivot into what I term the exciting challenges for us moving forward, right? So first off, after the 2 days and across the 3 cities, we were able to select 6 finalists out of the initial 25 that attended the boot camps across these 3 cities. Now, these 6 finalists showed very strong potential to deliver the type of models that will positively impact the agriculture sector, particularly, I would say, for the group that is most involved in the bulk of food production, and that would be like your smallholder farmers and your processors. Moving to what I call exciting challenges for us subsequently, as we keep planning Code Cash Crop, would be to really emphasize the place of gender representation in these conversations and in these spaces, right? Because whether or not we want to agree, right, women make up a bulk of, the informal sector, particularly the agriculture sector. So it's really important for us to have them present in these spaces, having this type of conversations, building alongside, for the agriculture industry. So those are the high points, and those are like exciting challenges that we're, looking forward to tackling as we move ahead with Code Cash Crop.
Yeah, talking about moving ahead, what are the next few steps and opportunities available? Are you having the 5th edition? What's next?
So yeah, we keep going to have more editions. However, the grand finale of this year's iteration is going to be holding on the 12th of August here in Lagos, Nigeria at Landmark Center. And between now and then, the 6 finalists that made it to the grand finale will be working on honing their solutions that they will now be presenting at the grand finale in front of a panel of judges. To know more or just to follow up on the conversations that we're going to be having, you can just follow our social media at AFEX Nigeria and go to our website at africaexchange.com/CCC4. Beyond the Ag Hackathon, we're also going to be having very important conversations around like fundamentals of scaling innovation, the importance of aligning sustainability with impact and profits, and a couple of other interesting things as well.
All right, thank you so much for that, Aonika, a public relations analyst with AFEX. So congratulations, and we wish you more successes in your Code Cash Crop program.
Thank you very much.
Let's take a breather. We'll go to another market afterwards. The FMDQ Exchange has some exciting news. We'd like to say congratulations to them as their ETD market goes live, and they join us now to tell us some of their plans and benefits as the ETD market, the FMDQ ETD market goes live. Joining us for that is Jumoke Olaniyan, the head business development with FMDQ Securities Exchange Limited. Good morning, Jumoke. Thank you for your time and congratulations.
Thank you. Good morning. We're so excited this morning, as you can imagine.
Yes, I can imagine. I'd like to see it on your face, though. So
yeah.
Tell us more about the significance of this milestone going live with your ETD, and also share some insights on your journey towards getting to this level.
Thank you. Let's start with the journey. I mean, we've been talking about this for a bit. This has been a journey that has taken us over 5 years to come to this point, to launch a standardized exchange-traded derivatives market. This had involved we having to have a feasibility study where we engaged stakeholders in the markets, from the regulators to participants in the market space, to anyone who has an interest in the exchange-traded derivatives market. And this culminated in us having a report that identified what needed to be done to build a vibrant exchange-traded derivatives market in Nigeria. And so that's what has been going on over the couple of years that I mentioned. Now, the significance of this is that the Nigerian financial market, like any financial market globally, is exposed to different microeconomic factors. You have exchange rate volatility, you have interest rate volatility, commodity volatility, equity price volatility. I mean, subsidy has just been removed, petrol prices have changed, even locally. Now, participants in the market need tools to be able to mitigate these risks when when they face this risk. It's just like when you buy a car and you buy insurance. You want to be protected, right? So that's what exchange-traded derivatives give you. And having it as an exchange-traded derivative product that is on an exchange has several benefits to it. First of all, one, being on an exchange makes it a very liquid product. Two, being on an exchange makes it that it has so much price transparency. And maybe even the biggest one is that being on an exchange, it's centrally cleared by a CCP. And that CCP further helps mitigate the risk. So you're almost assured of what kind of product you're entering into. So indeed, this is a milestone in the Nigerian financial markets because this is taking us and helping us leap far ahead and setting us in that international stage. Participants will now be able to use these products to hedge the risk that they're exposed to in the market space.
And you're going live with 2 products. Tell us about those 2 products.
Yeah, so we're very excited that we're even doing 2 products. As I said, you know, the different things that you put into place and take into consideration when you want to launch a product to make sure that the requirements are all in place. But we're starting with FGN bond futures. And for FGN bond futures, we're launching 24 unique contracts of federal government of Nigeria bond futures that are going to range from the 2-year tenor to 30-year tenor. So we have exchange rate derivative contracts that covers the full yield curve of FGN bonds that we have in the Nigerian financial market today. As a second product that we're launching is the FMDQ Naira settled foreign exchange future. And I mean, that I imagine is a very, very topical one for everybody today. And we're going to have 12 contracts, 12 monthly contracts of the FX futures ranging from July 2023 to June 2024. These 2 products that we've started with help the participants in the Nigerian financial market to mitigate against interest rate risk, because your bonds are, you know, susceptible to interest rate movements and volatility, and foreign exchange risk, of course, that we all know about in the Nigerian financial markets.
Well, Jumoke, we can see you're really excited about it. And we know we'll see all over the papers and other platforms, you know, some more information on this. We'll be looking out for that. But wish you the very best as you go live with your exchange derivative market. And I'm sure some of our viewers will reach out to FMDQ to get more information. Thank you so much, Jumoke Olani, your head business development with FMDQ Securities Exchange Limited.
Thank you for having me.
Right, let's head to London now, where the Bank of England seems to be so confident that it can stand economic crisis, stress test, whatever. But Juliana is there. She's closer to them, the Bank of England, and she can afford to tell us exactly what she thinks following this confidence vote that the Bank of England has given to both themselves and the banks operating in the United Kingdom. So, Juliana, good morning. Good to have you. And, well, the Bank of England seems so confident. Even you wouldn't believe it's the same country where you have the cost of living crisis that we talk about every day, mortgage rates going up, and everything that is related to that. And now we have this very confident Bank of England this morning.
Good morning, Inni. Yes, you're absolutely right. The Bank of England have conducted a financial stress test to basically see whether or not 8 of the biggest lenders in the United Kingdom can cope with a global financial crisis bigger than what we witnessed in 2008. And the reason why the bank is doing that is because it was the British taxpayer that had to bail out, I believe, at least 2 lenders in the United Kingdom during that time. According to the results which were released this morning, 8 of the biggest lenders, which include NatWest, HSBC, Lloyds, Santander, Standard Chartered, and the rest, are able to do it. And the bank used a series of parameters to test the stress of the bank, including if there were multiple recessions, including if interest rates climb any higher than where they currently are in this country at 5%, and also looking at whether or not they can deal with inflation. Of course, this is an annual test, so it's got no bearing to what the country is going through at the moment, but it is quite timely because, of course, last week the Chancellor of the Exchequer, Jeremy Hunt, convened a summit where the biggest banks were questioned about what they are going to be doing, considering that we have skyrocketing high mortgage rates at the moment. Yesterday, a 2-year mortgage rate reached 6.6%, meaning that anybody on that rate would be paying about £250 extra a month. I believe there are some provisions put in place to make sure that there were less defaults. Also, as well, lots of questions about the bank's profitability. We know over the past 13, 14 months, interest rates have been rising, which means banks have more in their coffers, but yet they're not passing that down to savers. So yes, banks, building societies, lenders, all in the news at the moment. But according to Andrew Bailey, the governor of the central bank here, they are fit enough to withstand even more turmoil. Although, of course, we're all keeping our fingers crossed, hoping we don't get to that stage.
Exactly, exactly, Julian. Let's not get too confident and try to test it. Let's just stay within the safe waters. And then we have the Liberty Steel planning to take over Hungarian steel. What's the backstory?
Oh, yes, that's right. Liberty Steel, a pretty popular business here in the UK, run by a well-known Indian-British billionaire, Sanjeev Gupta. Now, they have managed to put in a successful bid for the Hungarian steel firm. I believe they're called Juniper. They've been going through a series of issues. Again, lots of this linked to the global economic crisis that we've been coming out of, not just because of COVID-19, but of course because of the war in Ukraine. Both of those issues dented supply chains. They also made global energy pretty high, and the Hungarian firm were in trouble late last year. I believe they were put into liquidation. They had debts of over 1.3 billion euros. At the beginning of the year, Liberty Steel came in and supplied them with about 40,000 tons of coal, and then they put in a bid of 55 million euros to take over their assets. That was successful. I believe about 5 other firms also put in a bid, but this is just the beginning of what is likely to be a very long, complicated process. I believe the owners of the Hungarian firm Juniper are Russian and Ukrainian. Of course, there are geopolitical issues with that relationship. But yeah, a win for Liberty Steel, who I must say are still going through some issues here in the UK. But nevertheless, they've won this successful bid.
All right, so we'll follow up, as you said, complicated, we'll uncomplicate it. I trust Juliana to do that for us. Thank you, Juliana. Talk to you. Oh, no, we won't have you at 1:30, so enjoy the rest of your day. All right, now it's Ladis time. That means it's crypto time, and let's uncomplicate this crypto business.
Yeah.
They are so greedy.
Yeah, very greedy market right now. So it's not looking so complicated.
It's not. It's
really
just straightforward. It's a cruising time.
Yeah, cruising time, even though we're expecting a lot of volatility today. All eyes on that US CPI data coming out later today that will give us
all eyes on the CPI data from Nigeria coming up on Monday.
Exactly. Also that, Nigeria CPI. Because the numbers we're expecting are quite incredible. Let's look at the sentiment in the market now. We're seeing greed, 64 points. Going deeper into greed, maybe we might say extreme greed, going forward. Let's look at the top cryptocurrencies we track. Now we see Bitcoin that it topped about 31,000 yesterday. Up 0.73%, $30,743 at 8 a.m. this morning. Ethereum also holding up at 1,800 level, up 0.37%. On the flip side, 7337 BNB, $249 did hold that support well. The $230 support held well for the native coin for the Binance Exchange, 0.86% up. That's what we're seeing for BNB. Cardano, on the flip side, is also up 1.14%. After losing the 30 cent levels, 29 cents this morning, 1.14% up. And the only marginal downer we have in the top 100 coins on CoinMarketCap there, 47 cents down, margin is 0.05%. Let's look at the top gainers now. We see NEM, one of the oldies in the crypto market, 28.30% up. This has been there since before 2017. NEM, 3 cents. The Chinatown coin there, Conflux, that's 7.42%, 19 cents. After losing that 20 cent range falling as low as about 17 cents, now back up to 19 cents. If we AVE has been on a run for a while now. It's up 5.79% today, $75.03. For the month, since last month, things up about 20%, going forward. 1 inch, decentralized exchange, 32 cents, up 5.25%. So we're seeing the only double-digit gain we have on the top 100 there, up 28 cents. And we see for the top losers down, double-digit loss for MENA token there, 45 cents, down 10.58%. And we see eCash. eCash has been on a downtrend for a while now. One of the forks of Bitcoin there, 3.60% down this morning. AVEX also down 3.15%. XLM normally follows XRP. Guess is following XRP this morning, 2.55% down at 9 cents. So all eyes on that U.S. CPI data. Everyone's looking for direction. What's the U.S. Fed going to do next with rate hikes? So all eyes on that. Expecting some volatility today, Ini. So the market is not looking bad. It's still greedy. Still looking for direction, but that CPI data, that
there'll be direction by the close of work today.
We'll see what happens next.
Exactly.
And we know the Fed did pause, at the last meeting. What could happen next? Again, are they going to pause again? Or at some point, imagine we start hearing rate cuts at some point. Can you imagine how that would sound?
I think that, I think let's just handle the pause.
Right.
The pause.
Let's get used to a pause.
Exactly, because it would be too much of a change if we have rate cuts in the world today. That'd be incredible. That's something. All right, Ladi, thank you so much.
Thank you.
See you at 1:30. All right, so that is on the program. Thank you so much for being a part of the third edition of Business Morning. We've done 55 minutes, 3 times while time flies when you're having fun. We'll do it again tomorrow. I'm John McQuarrie, but I'll see you tonight for stock market reports. You can join me then. I'll give you an update from the equities market. Bye-bye.